Morning, everyone. Thanks for joining us today on our Making Tax Digital webinar. I'm just going to leave it just one more minute to see if anyone else joins. And there is recordings, so we can release some information, and there'll be snippets coming out after the meeting anyway to share amongst everybody else. If you do have any questions, I do believe there is a raise hand or a Q&A box at the top, and even a chat. You can put your questions in there and see. I'll keep an eye on it, but if I don't, there are other team members in the webinar, so they'll give me a nudge if there's a question. And if I do miss a question, I will come back to you personally on the answer. So I'll just give it a couple of more seconds and then we'll start with it all. But thanks again for joining us. A few more people. Here we go. Okay, I'll get started. So thanks again for joining us this morning. If more people join, I'll let them in. I'm Miguel at Blue Rocket Accounting, and I am heading up the Making Tax Digital side of the business with Inside. But even though I am heading it up, all of the team members will know what to do and how to do. So if I'm not around, there will be there'll be other people that can answer your question on that. So just get some more people in. So as we go, so today is all about Making Tax Digital, what it is and what it means for you. And just to give you a heads up, this has been around on the cards from HMRC for ages. I remember doing a presentation in Bexley in Metro Bank on it when it was first announced, probably about 9 years ago, and they just kept on pushing it back. But now it's actually being pushed live for self-assessment for it. So what is Making Tax Digital for self-assessment? It's essentially just a new way of reporting, making you do your self-assessment using compatible software. So compatible software is software such as Xero, QuickBooks, Free Agent. So it's not software that we designed or we created. It's software providers out there that create their own software for this. For the self-employed option, the software at the moment is looking around about £8 to £9 plus VAT. And that's the price that you get from them direct. Sometimes they do massive discounts for 6 months. You can buy the software through us and we just charge you the same price. All we're doing is just getting higher up on their partner program. It's entirely up to you. There are free softwares available out there. There's one called Pitfalls, I think, from memory and Wave. I'm not sure if they're Making Tax Digital compatible, but there'll be more softwares being released. So the software choice is entirely up to you. If you wanted a recommendation from us, Xero is probably the most favorable to use because of this user interface. It's really easy to use, and the apps that can be bolted on make life so much easier for everybody involved. But the software choice is your personal choice. There are some banks as well that give software to you free as part of their business banking. I'm not sure if they still do it, but I know Metro or NatWest used to give Free Agent as part of their business banking package. But it's worth a look. It could save you some money in the long run. But what Making Tax Digital means, or MTD, I'll start referring to MTD. It essentially means that you need to record your income and expenses digitally, and they get sent to HMRC throughout the year instead of once a year. And what that simply means is income and expenses are kept in a software and sent to HMRC electronically, not on paper, or not going on to HMRC software and typing it in, or using the software that we've got and typing it in. It gets sent to HMRC electronically. So that's the biggest change, is that you're moving from typing in the box a number to actually preparing the information and getting digitally sent to HMRC throughout the year, rather than submitting everything in one go after the tax year ends. So what's changing? It's mainly how and when you're going to be submitting to HMRC. And it will be on a quarterly basis. And I'll touch on the deadlines coming up throughout the webinar so you can see it. And essentially what they're trying to do is just see what your income, your profit, your expenses are throughout the year instead of waiting until the end of the year. So who needs to comply? So this is the big one. So it's anybody. So the first date to bear in mind is April 2026. So in a few months' time, if your self-employed income or your rental income or the both of those combined, the gross income. So this is the income you actually receive before any expenses, before any tax, is £50,000 or more. So if your income reaches that threshold, you need to comply with MTD from the 6th of April 2026. The next deadline is April 2027, and that is if those both incomes, rental income or self-employed income, the gross income is £30,000 or more. And then from April 2028, it's £20,000 or more. So as it mentioned, based on total gross income before expenses. And it's a combined. So if you've got £30,000 employed income and £20,000 of rental income, then you fall under MTD. It's not each singular one. When it comes to rental, it's your share. So if you own a joint property with somebody and the gross rental is 40,000, but your share is 20, then you don't fall into the MTD bracket. It's your share of the income. This also applies to partnerships. So if you are in a partnership and your share of the partnership income is above 50,000, then you would have to apply for MTD as well. Partnerships is a general partnership or an LLP. So anything that falls under the income tax regime, if it's anything to do with corporation tax or limited company, part of that, that's completely separate to what we're talking about today. The HMRC does work this out using your most recent self-assessment tax return. So the one that's just been submitted, or the deadline was last month. And based on that income, you're either in MTD or you're not, unless you know your income's going to jump. So they can tell you you're going to be in it, but it's not automatic. You do need to register on HMRC system to become MTD. It is a one-off sign-up. As mentioned, it's not automatic, and you should do it before the new tax year starts. So any time from now to the 6th of April, you need to register with HMRC to become on their MTD software, on their version, on their system. For our clients, we can do that for you. We can look at your software. So we'll look at your most recent tax return, see if you need to be in MTD, and then we can register you through our agent software. So a client of ours, you won't have to do anything. We will do it for you. As mentioned, it is a one-off exercise just to tell them that you're going into it. And in that exercise, you're basically telling HMRC the income, like, yeah, we meet the threshold, we need to be MTD. This is the software we're choosing, and this is the agent. So we'll be your agent. So it's really important before we register you that you've chosen a software to use. And the software, as mentioned previously, is your choice. QuickBooks, Free Agent, Xero, whatever other ones are out there. There are literally hundreds of them to choose from. But fundamentally, they're all the same. What you should be looking for is what's the most easiest to use. And in my opinion, it's Xero, but I know Free Agent have a really good system for small businesses as well, for self-employed people, because they set up their business in that sense to take it from there. Moving on. Sorry for checking the chat, see if anything's in there, but it wasn't a problem. What making tax digital means in practice. So they, as mentioned, digital record keeping and using approved software. HMRC has approved a number of providers, with more being added as the rollout continues. We do have a blog on list some of the most popular options, and we can share that after the webinar too. But I believe HMRC have an approved list on their website. But most of the main softwares I mentioned, Xero, QuickBooks, Sage, will be approved anyway. So when you're choosing your software, just make sure it is HMRC recognised for MTD self-assessment. There are a lot of software out there that is making tax digital ready for VAT. That is different to making tax digital ready for self-assessment. But a lot of the MTD for that should be ready for self-assessment, but they might not be going into the market because it's a smaller market for them. Ensure that it handles quarterly submissions and it supports digital record keeping of income and expenses. Any software should really do that, and integrates with your business. So, and that's the key point for me, is that you know how to use it, comfortable using it, and it's not just adding more headache. And just some reassurance of what it means in practice. The quarterly figures that you are going to be submitting, or us submitting on your behalf, will come to the options when we get to the end of the webinar. They are estimates, so they don't need to, it's not going to be like doing your year-end tax return. It is submitting information to HMRC, because the adjustments happen on your end of year submission. So what that basically means for you is that where you was doing one tax return a year, so effectively one submission, there is now 4 submissions, so one a quarter, and then still the year-end submission, which is basically the new name for tax return that you've been doing. HMRC isn't checking every receipt you send, so don't panic about that. Although it doesn't surprise me, at one point in the future they may have the ability to do it, but right now they're not. But what they can see, or what they will be able to see, is every line of every transaction. So date, amount, supplier, and the other thing, just to be reassured, as we get to the options, when we come to it later, if you're not comfortable using software, you can still give us paperwork and we can digitize it for you, ready for the submission. We'll come on to those. So making tax digital, MTD is about how records are kept, not how good you are at bookkeeping. But being good at bookkeeping does help, because it makes everyone's life easier. So the quarterly updates and end of period submissions. So as just touched on, instead of 1 for the year, there'll be 5 across the year, 1 each quarter, and then 1 end of year submission, the tax return. So the dates, so these dates are fixed for everybody in self-employment. So the first quarter will always run from the 6th of April, 5th of July, and that needs to be submitted by the 5th of August. So you essentially get 1 month to submit after your quarter ends. The second quarter will be the 6th of July to the 5th of October, and then needs to be submitted by the 5th of November. The third quarter is the 6th of October, the 5th of January, and needs to be submitted by the 5th of February. And then the fourth quarter is the 6th of January, the 5th of April, which then needs to be submitted by the 5th of May. And then it continues. It's always those quarters for you. In no submissions, we're only looking at your self-employed income and expenses and your rental income and expenses. If you receive dividends, pensions, employment, you don't need to worry about that until for those quarterly submissions. And then the 5th submission, which is your normal term, has to be submitted by the 31st of January, which is the usual deadline. And that's basically a wrap up of all those 4. And then on that submission, your final tax return, the final submission, is all of your income. So that's when we include the pensions, the employment, the dividends, interest. So MTD is about reporting little and often. And just to reassure you, it's not about paying tax more often. So they haven't mentioned that each time you do a quarterly submission that you have to pay your tax, but knowing HMRC, give it a few years, they probably won't. But they probably will do. But the beauty of doing this from your point of view is at the end of each quarter, you could essentially know what your tax liability is going to be. So, and if you choose to, you can pay it to HMRC on account and they will pay you interest for paying it early. Or you can just set it aside in a savings account and know it's tucked away and there's no more surprises for it. As everything with HMRC, when it comes to submitting any return, there are penalties for late quarterly submissions. The slight difference here is not like the normal tax return late filing, where if you're 1 second late, you're going to get £100 fine. It's more in line with the VAT late submission penalty regime. So if you are late, there is no immediate £100 fine. It's on a points-based system, which is the same as VAT. So each late submission, you get 1 penalty point. And then when you reach 4 penalty points, so that's 4 late submissions, it's a £200 fine. And then once you've reached that 4 penalty points and the £200 fine, every submission that's late afterwards is another £200 fine. The points do reset, but after a year's worth of filing on time. So an example of that would be if you filed all 4 late in the first year, you'd get a £200 fine. You would then have to file the next 4 on time for your 4-point penalty to reset to 0. So some common misconceptions and pitfalls, which we've touched on already. Doesn't mean paying tax quarterly if you don't want to. You can keep the money, you can keep the cash, but a benefit of it is you could potentially know what your tax liability is going to be. Choose the right software and poor record keeping. So they're the pitfalls. So the software is the biggest thing here. Is choosing the right software, because the software will make everybody's life easier, your life easier, our life easier, and it will just make things so much simple. And then just some tips, and this will become more relevant when we see the options in the next couple of moments. So if you don't already have a separate business bank account, you should have it, because the way the software will work is that it's going to track the transactions from your bank account. It will look at all the incoming and all the outgoings, and it's going to want you or us or somebody to categorize those into a heading. So whether it's rental income and management fees and repairs, or whether it's your sales and your motor expenses and your insurance. If you've got loads of stuff that's not business related in there, that has to be categorized as well. And it's just more work for everybody. So having a separate bank account for your business is ideal, and then you pay yourself from that business account to your normal everyday current account. I would even go as far to say, if you've got self-employment and rental, have 2 separate bank accounts. So one for your self-employment and one for your rental. I'm not saying each rental property needs a separate account, but business and rental should be kept separate. When you look at the software, keep it really simple categories. So they all come with standard categories in the sense of income, motor expenses, insurance, print, post and stationery. Stick with those. The smaller amount of categories, the easier it is for everybody. I have looked onto people's bookkeeping softwares and they have hundreds of categories, which is brilliant management information, but for the purpose of what we're talking about today, it's not relevant. Then it's all about doing things little and often. So if we're doing stuff for you, we will aim to do it monthly. If you're doing your own stuff, then I would suggest doing it daily or maximum week. And so I do the bookkeeping at Blue Rocket. I do that every day. So it takes me 10 to 20 minutes to do it every morning when I get into the office, bring our books up to date, know exactly where it stands, know everything's reconciled. When I was leaving it for 2 weeks, then it would take me 2 to 3 hours to bring it up to date. But it's much more easier just to do it little and often. So you'll get a habit of that, and it'll be easy when you log on every day, every morning, or once. Just jump on little and often. So top tips: separate bank accounts, keep it simple with categories, little and often. They're the key messages for using the software. Now moving over to your options. So that's all about MTD and what it is, what to expect, what the filing are. So the main aim of this webinar was to give you options going forward. So there's essentially 3 options for you as businesses and working with us as Blue Rocket Accounting. So option one is that you do everything, which is an option. So you keep all your digital records, you submit your quarterly updates to HMRC, and we're not involved in the MTD process at all. So from your point of view, the time commitment's high because you're going to be doing the ongoing bookkeeping and the submission. The pros is that it's cheap because you've only really got the software cost and you have full control over your records and submission. The cons is obviously the highest time investment from you, and you might not enjoy doing it. There's no professional review and there's greater risk of errors, penalties, or missed deadlines from there. So it's ideal for people who are confident users with the software and HMRC submission. So that's option one. Option two is you keep the records and we do a check and file. So essentially this means that you do all your bookkeeping on your MTD software for the quarter. Then you tell us, Miguel, our records up to date on the software, please get it ready for submission. We will then log into your software. We will review your records, make sure they're accurate and compliant. We will then feed back to you, say that we've done this, 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 and this. Then you learn from the process and don't keep doing the same thing. And then we'll submit quarterly updates to HMRC on your behalf. So from your point of view, time commitment is medium because you're going to be doing the regular bookkeeping, but then we're going to be doing all the HMRC stuff. So the pros is a balance of control and professional oversight. Should have reduced risks of errors and penalties and less time dealing with HMRC. So the cons for you is it still requires you to do the bookkeeping and corrections may be needed if records are incomplete. Because we will do proper checks as if we're going to be doing your tax return, so we'll highlight stuff that's there. And this is ideal for people that are hands-on business owners who want reinsurance and control of records. So option three is we do everything for you. So we've gone from doing nothing to everything in the bit in between. So we will do all your bookkeeping throughout the year. We will submit all your quarterly updates and you stay fully compliant with minimal admin. So this is the least time commitment for you because all you have to do is get us the records. You're going to be, the pros are fully compliant and stress-free, maximum time saved for you, and it's professional handling throughout the year. And the cons, this is going to be the highest cost of all three options. And then it's less hands-on involvement with day-to-day numbers from you. Even though we can feed back reports to you, we can give you overviews of what your positions are. So this is best for business owners who want a fully managed, stress-free solution. And this is essentially, you just give it to us and we crack on with it. Those are your three options when it comes to it and working with us. Just to give you a quick cost comparison. So on here, I based this on, so option one is essentially the software cost, which is £9. Option two is you do the bookkeeping, we do the check and file. So this is based on somebody, a self-employed person who turns over, whose gross income is between 30 and 70,000, has 50 bank transactions a month, 5 sales invoices and 10 supplier bills. So that's how we price this based on that, which is why this is just an overview to give you an indication. For your personal price, you can speak to us, we pay you the proposal, we can send it over to you. So the check and file would be £22.20 a month. That's including the software costs, and then it's a £13.20 check and file fee for someone in the turnover range. And if we do everything, so it'll be £80.15 a month. So that's the software cost, the check and file, and the bookkeeping. We'll be doing literally putting everything, digitizing every receipt, bank transaction that you've got onto the software to make sure that you're fully compliant. Again, just to reiterate, this is based on that scenario in the bottom left-hand side of the screen, those turnover and figures. It can be, it will more than likely be different for you if you don't fall in that criteria. So it's worth a quick call, go through your proposal, and then we can send it out to you. A question that come through, do you have to upload every receipt to the software, or are they just bank transactions? The short answer is, at the moment, it's not mandatory to upload every receipt to the software. No. but best practice says that you should do that. And it depends on how your receipts work. So let me give you, so the reason it's best practice is because of when all your receipts are kept digitally in your accounting software, you don't have to keep the paper receipt, email files, it's just there. It's just there on your software. So if you get a question in it in 6 years' time, you can find a transaction in software, pull the receipt off, done. You haven't got to keep the paperwork. You haven't got to take storage up in your house or your office, keeping records. It's all there, nice and clean and efficient. The second reason it's important to do it, it depends if you get credit for stuff. So if you buy something on the 31st of January and you don't pay it until today, technically that receipt should be in January's numbers because it falls within the month of January. Whereas if you're just looking at bank transactions, it will show in your February. Okay, in those months, it doesn't really impact your tax as much. However, if we were talking about April and March, if you bought it on the 31st of March and got the invoice but didn't pay to the 6th of April, you wouldn't get the tax relief for the year. You'd get the tax relief in the next year because you're only looking at bank transactions. So even though it's not mandatory, it is recommended to do it. And it sounds more intense than what it is, purely on the basis, because I can use Xero because that's what we use. So Xero has HubDoc that built into it, and you can upload receipts to that, and it processes it once it's trained to do it. So it's really, really quick, is the honest answer. Once you're doing it, it becomes so much quicker and easier, and you can why you didn't. So MDT is mandatory. You just need to decide how involved you want to be, as that is your choice. And then the last option, so if you go for option 1 and you do it yourself, we will give you MTD software training on the software of your choice. So there's 2 types of training. So we have one-to-one training, which is what it is. We will sit down with you on a one-to-one basis on the software that you choose and show you how to use it. And that will be from raising sales invoices to attaching receipts to the software and processing all the bank transactions. And even if you do the submissions yourself, we'll show you how to do the submissions once it's set up. Recommend an hour for that, and we're up at the training sessions are at £75 VAT session, and that's tailored one-to-one with you. But we are doing group sessions, so if it's a minimum of five attendees, and if those 5 attendees want to use Xero, then we'll give a one-hour guided session covering the essentials on Xero and how to use it. Of course, we'll answer your questions in those sessions, but if you're all different industries, it could be unfair on the other people to go into specifics of those. So if you're going to do it yourself, which is a perfectly fine option, then training alongside that would be the most sensible option for you. But even with option 2, where you do the bookkeeping and then we do the check and file submission, doing the software training on how to use it, what to do, is the most sensible option for it. This comes down to essentially time. So do you have the time to do it, and do you want to do it, and weighing that up against the cost of getting somebody else to do it. So your next steps, if you've got any other questions, please put them in the chat, and then I can go through those. I know there's the one about the receipt. So really the next steps for you as business owners is choosing your software. The registering with HMRC's new system for making tax digital, we will do that on your behalf. But you need to choose your software. It needs to be chosen before 6th of April. You need to register before the 6th of April. So give yourselves a deadline, end of the month, choose the software. Or even choosing the software before the end of the month, because what you do is choose the software, get the training, so you're all ready the 6th of April when that first bit comes out. A question just come through: does CIS work in the same way? Yes. So if you're a CIS subcontractor for a larger contractor and your income exceeds 50,000 to the gross income, to the amount before taxes, not any expenses, you do need to use software to report it on the full submission. It all goes through in that sense. The only slight difference with CIS is you need the CIS function in your software so you can show that the tax is being stopped. As mentioned, choose your software, get the training booked in. See, Sarah's just shared some stuff in the chat about software recommendation, and that's it from me. So thank you for joining us. If you have any questions, any further questions, please feel free to email them into me or to Sarah in the office, and I'll come back to you. As mentioned, really the key points for you today in this next couple of months is decide what option you're going to go for, and then if that requires any training, and then choice of software. So you're all ready for the 6th of April, and you want to be able to start using the software from the 6th of April, not get to the end of April and think I need to catch up a month, because that makes it so much worse. So thank you for joining us today. We hope you found the webinar gave you some clarity around making tax digital and that you found it helpful. If you'd like to speak to us and how we can help with your submissions and compliance, get in touch with the team, and you can also drop me an email. Problem. I hope you all enjoy the rest of your day.